The 4-step method to high performance trading is about bulletproofing your daily routines, your executions, your skill set, your mindset, and your beliefs to execute your edge trading in live time. Building your discipline and confidence in live time is how you will be able to produce those results consistently over the long term. The 7-step daily routine for high performance traders is about developing your process, your habits, your mindset, your beliefs, your skill set to master the markets. Bulletproof yourself for success and consistency over the long term. The links are in the description box below. Let's get started.
G'day traders, another short video today following up on yesterday's video. We're starting a new month. We have a new timing cycle. We have huge opportunities that are going to present. But the number one variable that will interfere with any trader's success is staring back at them in the mirror. And the question that I ask, and I ask daily, is what setup are you hunting? If you aren't hunting a 90-10 money-making trading setup, regardless of your approach, your beliefs, your mindset, anything that has preconceived ideas regarding the markets, if you aren't hunting a money-making trading setup, what exactly are you doing? That is the real question. Because markets only do 3 things. And we talk about this daily. I'm going to keep hammering this home this week to reinforce to traders simplicity, reproducibility, and scalability of their trading business. The most important thing, again, to take away from this video is that markets only do 3 things. They only do 3 things. They break out, they pull back, they continue to trend. They break out, they fail, they reverse, or they stay in the trading range on any time frame. The most important thing is to keep it simple. If it's not simple, you will not reproduce your results consistently, and you will bounce back and forth between winning some, losing some, but over the long term, actually really going nowhere. And in a high percentage of cases, a lot of retail traders will blow up their account at some point from random, impulsive, emotional, self-sabotaging behavior and start the entire process all again. Now, this is my approach. This is what I believe. This is what I focus on a weekly basis. And the best part is it means nothing. It's irrelevant what anybody else thinks. It's irrelevant what anybody else thinks they know. The experts, the gurus, all these minutia diddling systems, whether they work or they don't work, is irrelevant. It's completely irrelevant. The only thing that matters day in and day out for any single trader or trading business or hedge fund or any large institution, the same question applies. How is your trading business making money? So whether or not a guru knows everything, or we're focusing on minutia and trading blocks, sweeps, gaps, hunts, runs, soups, whatever else, or whether it's Wyckoff, whether it's Toby Crable, whether it's the Taylor method, whether it's Gann, whether it's classical charting, it means nothing. What only matters is what you're going to do and whether or not you have a winning approach or a winning edge to the market. If you're managing your risk, if you're setting take profit levels, locking in the money, and not doing anything else to damage the good results that you do get in between. So I've talked about focusing on the daily time frame and targeting signal days, focusing on 1 or 2 winning setups, building your watch list each day, whether you're focusing on one instrument and targeting high probability days or on a basket of instrument targeting high probability days, regardless of the session that you are trading, Asia, London, or New York. And then how is price behaving into your timing window? Now, we've had multiple examples of the same repeating winning setups on any market in every session. Daily signals, multiple days of breakouts in the market, building your watch list, targeting first red days, as I mentioned yesterday, targeting reversals, but the train has left the station in earlier sessions, but closes the day as a first red day, and the same applies for first green days. That can carry through on a higher time frame monthly template. Go back and watch the higher time frame videos for low of day buying opportunities or high of day selling opportunities. And of course, the inside day, false break reversals and trend trades. Now, one of the questions that was asked was about multiple variations of inside days. Do your homework. Which type are you targeting? Are you targeting reversals? Are you targeting trend trades? Understand how inside days can occur at weekly or monthly extremes. Build your muscle memory. It's not a guessing game. It's about targeting specific repeating setups that come from the daily time frame. Now we spoke about A triple plus, A double plus, and A plus opportunities. New timing cycle, new behavior of price, whether that's a weekly or a monthly chart. Now, one of the best things about targeting the daily time frame is that we're targeting asymmetrical risk reward. We can target high of week to low of week opportunity, a high of day to low of day opportunity, or a session nail and bail. The opportunity is there, but it's for taking the money in the session. We have signal days, inside days. We have multiple days of breakouts. We can have first red days that give us a higher time frame potential area where selling may occur. Now, these are shorting examples. As I've talked about, I like to short certain markets. I look for repeating behaviors of price. But the higher time frame gives us signal days. It's not about trying to trade all the minutia and catching moves and being at the screen all day. Several traders asked, well, what about the timing? Punch timing into the search box. I'm looking at trading 1 hour a day in the New York session. If I'm trading Asia, I'm looking at trading 1 hour a day in the Asian session. The trade may take 2 hours to hit a target, but I'm at the screen, I'm executing the trade. I may move to break even and have a take profit level, but I'm not sitting at the screen all day. I'm looking for the same repeating opportunities in the timing window once I have a signal day. Now, yesterday we went over an example on oil. We had the signal day, the inside day on Friday. We had the dump, coil, and pump template that is now continued into a day 2 range expansion. Day 2 typically expands the range. All we've done is talk about signal days. We've talked about our Monday, Tuesday, Wednesday template, day 1, day 2, day 3. I'll repeat, day 1, day 2, day 3, reset. Wednesday becomes day 1 into the backside of the week. Day 1, day 2, day 3. A question I got right after I mentioned this in the video is I'm confused about the day count. Monday's day 1, Tuesday's day 2, Wednesday's day 3. That resets and Wednesday becomes day 1 into the backside of the week. Day 1, day 2, day 3. Friday's closing price is where everything starts from. Now we're looking at the Japanese yen daily chart. Very similar to the oil chart from yesterday, we have a signal day, an inside day on the very first day of the new trading month, Monday. That was a U.S. holiday, but we had an inside day at the close of the day. New York time, New York charts, New York is the closing time of the day. But I also want to paint a larger picture for traders to go back to the higher time frame. Go back, here's your first piece of homework. Go back and look at your daily charts and look at the beginning of a new month, a new timing cycle. Now, we just got done saying that everything starts from Friday's closing price. We had a signal day. But I also want to point out to traders that we were in a larger trading range. If we just project our highs and lows across the beginning of the previous month, we can see market in a trading range. So markets only do 3 things. They break out, they pull back, and they continue to trend. They break out, they fail and reverse, or they stay in a larger, higher time frame trading range. And as this month progressed, we saw a market that traded back and forth between 2 extremes. So coming back to simplicity, not minutia, not focusing on all kinds of crazy things, whether they're right or wrong is not the issue. Being right or wrong has nothing to do with being profitable. What winning setup are you hunting? because opinions and everything else mean nothing. What winning setup are you hunting? Are you building your watch list? What are the signals that will point us in a direction of a winning setup? Now, what I do and what you do don't have to be the same. You can trade any way that you want. But as we head into the new week, the new month, the new timing cycle, we have an inside day, signal day, and we also have another inside day from the previous week that if traders just look at the higher time frame, recognize that we're just trading inside of a daily range as we start the new month. We have a high and a low area. And if we go back and just look at the weekly and monthly levels, keeping things simple, we can see markets that bought down low and they also sold up high. They sold up high. But we have a signal day on Monday, the first trading day of the new month and a new week. When we narrow down into the smaller time frame, we can also see that Friday was an inside day. We have a double inside day. Double inside day, page 74 in the playbook. It's rare, but it can be an indication of a potentially explosive move. You combine that with the new week and the new month, we may have a best trade candidate setting up. If we go down to our smaller time frame, we can see that Friday's closing price is still a significant level as the Asian session begins. And we put our basic model for trade entry criteria, page 29 in the playbook, onto our chart. We have a pin, hammer, a 1-bar stop in a coiled market for an explosive parabolic reversal. Now, for traders who are unsure and they haven't mapped this out and they're actually not hunting a setup, they're just looking for trades, then this might not have even come up on their watch list. But for traders who have done their homework, it's not about the trade on the day, it's about doing the homework, hunting out the opportunity, having that instrument on your watch list, which would make sense that you may have some Asian pairs for the Asian session on your watch list, and then whether or not that opportunity presents. Traders from the masterclass will recognize that we have our multi-time frame coil and that you can only trade in one direction. You can only trade in one direction. We can manage our risk. We have our entry criteria met, and we have a take profit level, and that's asymmetrical risk reward. That's a parabolic opportunity. We're not trying to catch the low or catch the high or catch a move because it's moving. This is a rinse and repeat opportunity, which actually looks exactly like the setup we saw yesterday on oil. Same signal, same opportunity, London session parabolic trade, which if we just move across, we can see that opportunity is now continued on day 2 in the Europe-London Open, expanding the range. Rinse and repeat, same signal, same opportunity, different session for traders in the Asian window, different instrument, parabolic explosive move. A higher time frame signal in a larger trading range, we want to be buying low or selling high. A fantastic, excellent trade setup today for traders in the Asian window. Congratulations to the traders that executed that trade. Now, another opportunity presented for traders today in the London session. Again, if you're going to be trading London or Europe, you may have the euro or the pound on your watch list. But we just spoke about multiple days of breakouts and using our higher time frame daily chart signal days. Now, I want to repeat to traders the purpose of using your daily chart, or for me, the reason I'm using my daily chart is because I'm targeting a daily range. I'm looking for signals on the daily time frame to target the highest probability / possibility days. Now, here's the best part. What anybody thinks, what anybody else says, all that stuff means nothing because the same things are going to happen again and again and again. The only thing that matters is what the trader themselves is going to do. So whether or not somebody's figured out a magic algorithm, or there's a boogeyman in the machine, or there's a soup, a gap, a run, a sweep, a hunt, or it's Toby Crable, or it's Wyckoff, or it's Gann, or Elliott Wave, or any of the other things, means nothing. The only thing that matters is what the trader is going to do day in and day out, week in and week out, whether or not they actually are following and hunting a winning edge, or whether or not they're just randomly, impulsively looking for trades because they're smart and they've figured out everything about the market. Again, that's my opinion, my thought process, my beliefs, which is why I look for the same recurring behaviors on any market. Now, going back to the higher time frame, new month, new timing cycle, again, go back and study your daily charts and study the monthly opportunities that can present when a new month starts. So we can project higher time frame levels across, because markets only do three things. No matter what somebody else says, does, or thinks, they still will only ever do the same three things they have only ever done. They have only ever done three things. And so when somebody tells you they've figured out everything and it's smart money or dumb money or whatever else, it doesn't matter. Markets only do three things. We have an area where higher time frame selling came into the market. And we have an area underneath of that month where higher time frame buying may have come into the market. We saw explosive reversal after Powell's Jackson Hole speech. But we have signal days. We have multiple days of breakouts. We have a market that has closed in breakout. We have a market that has closed and breakout again successively before pulling back, reversing, and closing out the month. New month, new timing cycle. We have a market that has closed in breakout, potentially back up into a higher time frame selling area. Now let's go back to what I just demonstrated on the Japanese yen. We actually have a large trading range, 1 bar. So all the other days trading is inside of a large daily range. Markets only do three things, but what traders do is an entirely different question to be answered. Now we have an opportunity at a new month, new timing cycle. How does price set up and behave on the day into a trader's timing window? Now here's the thing. The instrument can go on your watch list. You can be trading Asia, London, or New York. Now the market may not set up in Asia. It may not set up in London, and it may not even set up in New York. But if the train has already left the station or it's setting up into your timing window, what the trader needs to understand is you need to build your muscle memory and your expertise on what a well-engineered selling or buying template looks like on the day. So number one, you have to have the setup that you're hunting. You need to know exactly what you're looking for. Number two, what signals are going to bring that instrument up on your watch list? So how the trade works is irrelevant if you don't even know what the setup is and what signal is actually going to bring it up on your list. So the first thing to master and understand is, what am I looking for? What setup am I hunting? And then what signal is the higher time frame going to give me that a market may be setting up for a best trade candidate, a parabolic opportunity, an all-in, a triple plus? Now let's look at this daily chart again. What is the signal? We have a market closing in breakout. Let's go back and look at our A triple plus, A double plus, A plus opportunities. I like to short things, so I'm looking for markets that are going to give me signals that they may potentially be about to reverse. Now, is there any major red news on the calendar? Is there anything that I need to wait for the market to digest? Am I looking for a first bar or a first bounce, momentum, news, catalyst, trade setup opportunity? Or is there no news and I can execute the trade setup as normal in my session, in my timing window, if that setup presents? First of all, we have our signal day, and we just went back to our higher time frame to demonstrate we're up at a higher time frame selling area. And traders say, well, how did you know that was, going to be there and everything else? And I just said to you, there's a signal day. Now, if you don't have a watch list, you won't have a clue. You'll just be looking for an opportunity to either buy or sell somewhere if something's moving. Now, we just said that markets only do three things. They break out, they fail, they reverse, they break out, they pull back, and they trend, or they stay in a higher time frame trading range. Now, we just showed on the higher time frame, we're actually inside of one large daily range, Monday, new week, new month, new timing cycle. We have a market closing in breakout at an extreme up in a higher time frame area where selling has occurred before. Is it possible that this market may offer us an opportunity if it sets up? How should it set up on the day? Well, again, go back, build your muscle memory. The traders in the masterclass will recognize a market closing and breakout coiling sideways. What is coiling sideways? It's moving sideways in a rectangular, geometrical, classical charting price box. A box. It's not ranging all over. It's not trading down and trading up and everything else. It's gone sideways. It's actually just moved sideways in a very narrow, tight range. Now, our simple basic model, which is there for a visual confirmation to remove analysis paralysis for traders, nothing else. Traders are always asking, what EMAs are you using? It doesn't matter. Use any EMA you want. It's for a visual confirmation for traders struggling with analysis paralysis. We have an area to enter the trade. We have our level, the breakout level. The breakout is now potentially failing. We can manage our risk. We can set a take profit level. And traders from the masterclass will recognize that you can only trade in one direction. All time frames are aligned. All time frames are aligned. You can only trade in one direction. We can manage our risk. We can scale in. This is a scalable A triple plus opportunity. And why is that? Well, we just said that the A triple plus is a weekly range. And if we go back to our daily chart, we can see that we were targeting a daily range. We have a high of week in a new month, the reversal setup, and the opposite side of that range where we have higher time frame diddling inside, caught inside for an entire high of week to low of week reversal opportunity. See, the big thing to understand is there's going to be a lot of traders out there who disagree. Some traders agree. None of it means anything. The only thing that matters is what you are going to do. That is the only thing that matters. Only thing that matters is what you are going to do. Do you have an edge? And do you stick to your plan? What setup are you hunting? What is the signal day that will bring an instrument up on your watch list? What session are you trading, and how is price behaving into your timing window? And then whether or not you do other random, impulsive, self-sabotaging things in between. That's the reality. Trading can be as simple and pleasurable, as Paul Tudor Jones says, as you like. Markets only do three things. Traders can do all kinds of things. So again, the theme of this week is repeatable, scalable, 90-10 playbook opportunities. Agree, disagree, all that means nothing. What you, the trader, the only thing that matters, what is the trader going to do? Being right, being wrong, knowing everything, knowing about how a market works, an algorithm works, all that's great. But exactly what does that mean if you don't stick to your plan and you don't have a rinse and repeat money-making blueprint for your trading business? What are you going to do today, this week, next week, the month, the year to build your trading business? Rinse and repeat, keeping it simple and scaling it up in size. Hopefully this helps traders. Again, the same things are going to happen today, tomorrow, next week, because markets only do three things. What 90-10 money-making trading setup are you hunting? Keep it simple. Have a great day. Focus on only the best trade setup opportunities. Hunt out your edge. Keep it simple, and may the markets go with you.